Alrighty, it's Doc from North America, and it is Monday, TGIM. Thank goodness it's Monday. And let's see what else we got going on here. You can see the, that's the yen. Let's get the dollar index. The dollar is, bouncing a little bit. Nothing major as far as I'm concerned, but let's take a look at it. And good morning, good afternoon, and good evening. It's 9:31 in Tokyo p.m. Here in the States, it's 7:32 a.m. So the world is just rolling along. You can see there a couple days now of strength. This is a daily on the dollar index. That's the DXY. You can see that's they've kind of dug in and found themselves a bottom using the J4X here. And then over here on Chicago Quant Technologies, or as we used to call it down on the trading floor, Chicano. Because of the way all the valves kick out and look around. Let's see, where are you? Not there. That's the currencies. Let's go right and there we go. There's the euro again. And let's take a peek at the dollar index as we slide down, and there it is. And I think did it close in a buy on Friday? I think it did something like that. That is Friday. It's not reflecting what's today yet. We're not getting that. Let's see if we can give it a refresh. Sometimes the index likes to update, and sometimes it does not. Let's see. Let's go with like 3 days. Nothing yet. Maybe we can change the parameter of it and see why it's not reflecting what's going on live right now. Let's go with default. See what default does. That didn't do it either. Okay, but it's obviously, you can see it went into the buy on Friday, and I'm not sure why it's not updating on our system today, but it will. Give it times. It's a stock indice, so it's not really something physically trading, and anything's possible. But it will. Now, let's go over to the chat line and see if anybody is here today, or everybody's sleeping in on Mondays. Now, what is that? Why am I having problems here? If it's not one thing, it's another on a Monday. That's why. Close. There we go. All right. Cranking up the old chat line. Check that. There we go. Now we're starting to get to the chat line. Let's see, Dukascopy right there. And I'll take a sip of our tea. Let's move that over to there. I was laughing at my desk this morning. It's like a pipe over here and glasses over there. It's like, oh. Let's see. Come on, Dukascopy. It's filling in now. We'll see this, so we'll take another sip of the tea while we're waiting. But we can talk about the J4X and so forth, and you can see the different product, or both of them. You see right there that strength. It doesn't surprise me in the sense of we expect to see some that cat bounce. It should be something just like it had it right there. It has. Someone's got to take a profit. In other words, for every buyer there's a seller. For every seller there's a buyer. And when you've been selling short and watching it go down and down and down and down, sooner or later you want to take that money and you go out and buy a cup of tea, or take some of that money and go have a nice happy dinner, or buy a new airplane, or do something. Okay, here we go. Now I see us and the chat line, and so far it doesn't look like. Oh, what we got there? Azat, hey, what instrument are you trading? Me, I bounce around. I like the S&P 500. That's one of my favorites. I like trading the euro. The euro's a fun one to trade. They're good products. I don't really fool with the indices on the stock, the currency indices. Not really. I'm more of I enjoy looking at them, but I don't really care about trading them too much. But there are people here who like to trade the DXY. the one on Chicago Quant right here, this one right here, is the dollar index on the Chicago Mercantile. And I'm not sure why it's not filling in this morning, but this is Friday's close. You can see we had went into the buy on Friday there, and over on J4X right here, you can see the same thing. We were in a daily buy there also. See that right there. The line had not gotten through, so it was just starting to do it, and now we're, I guess what you're saying is now it is. Today it is. So it's sliding into the buy today, because we like to see this little green line piercing this little dashed line there. So I hope that helps you. We watched, like I said, we watched a lot of different products here. A lot of different people like to look at different products. We love putting up any product you would like to look at, and you can look through it through the eyes of our mathematics, and that's always fun. You never know when you're going to find a good trade. That's it's a big universe out there of financial instruments. So. When someone says, hey, I'd like to look at this, we look at it and we go, wow, sometimes it's like, hey, that could be a good trade. I want to be in there too. I would have never even thought about it. I would have just stayed with what I'm paying attention to, There we go. So, yeah, you can see there, what's going on in the indexes and, the currency indexes. Right there. There it is right there. But, look at this ride all the way down, 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 down. And you can see when we go over to our Chicago Quant, it's even more obvious in the sense that the weekly and the daily are on the same screen. So you can see we've been in the sell off and on a little bit right here back in, what is that? That is... late October. We went into a weekly sell up in the 13, or it's basically it has one more currency than the DXY, but they marched together. I think it has the Australian dollar in it, and so it has all 6 currencies in the DXY. The DXY has the euro against the dollar, the yen against the dollar, the British pound against the dollar, the Canadian against the dollar, the Swiss franc against the dollar, and the kroner against the dollar. Okay, so it has those 6 currencies. That's what makes up this index, and the DXY right there. And then the Chicago Mercantile one has one more stock. It has not stock currency. It has the Aussie. So that's why they look a little different. But I thought it was kind of interesting because I do think it's interesting to see what the Aussie's doing since they have all those natural resources. So I hope that answered your question. But if you see something you would like to look at, we'll put it up on the screen and see what's going on. All right. So from there, let's go over to the... Oh, what do we got here? There's Nina. Would you possibly... Not with the last... Yep. Daughter just asked me a question. All right, let's jump over to, where do we go from here? We'll go over to the currencies, and there is the Aussie, not the Aussie, the euro. You can see we went into a daily sell on Friday. Same situation there, but you can see the strength against the dollar has been going on a while, since late October, just like we showed you in the DXY. The dollar has been going down. It's gonna zig and zag. There's going to be profit taking, so forth and so on. But do I really think that the general trend, just from a couple days of action here? Nah. Even if they got it into a weekly buy, we would be a little bullish on the short term. But I think overall, that's a personal opinion I have, not my math, that the dollar is going to find its way back into the 90s. That's what I think. And I'm talking about the 90s in the DXY. What charting or analyzing tool on your screen right to the J4X? Oh, for J4X now? I call it the Manhattan indicators. What it is, it's a combination what we do is we try to emulate my math. Okay, so you see here, you see these little dots on the bars. Henke Ashke does a pretty good job of emulating that. So he put them on there. Then, let's see if we can make this bigger. Right there underneath, this green line is a fast-moving stochastic. You can see how the arrow's on it right there, and it says it right there, stochastics. See where it says fast D. That's the fast D. The dashed line right there is the slow D. Okay, and I can show you the parameters of it too. So let's see, edit indicator. Okay, so there is the parameter. Where is that? That's 5, 3, and 3, and that is the slow, and it's the D. You don't see the K. We don't show the K, and then the same thing with the fast. There you are, and that's the same way there. There's the parameters 5 and 3, and it's the fast D. And then obviously the Henke Ashke's. Let's see, edit right there, inputs, outputs. There we go. And there's the Henke Ashke. There we are. It just shows you the parameter of it. How's that? Did that help out? Hey, Robin. So it's a combination of a bunch of physicists used to use something like that back at Stony Brook during the Manhattan Project. So I call it the Manhattan Indicator. They had 3 hours of downtime when they were building the and exploring the development of weapons, out in Los Alamos. And Los Alamos is 3 hours difference to New York City. And the computer they used to crunch the numbers was at Stony Brook. So they had to Oppenheimer would send the formulas that they wanted to crunch the computer's models on. They were doing their AI thing back then. And the scientists were all sitting around doing nothing. So they said, we got a mainframe sitting here. What the heck? Let's aim it at the New York Stock Exchange and see if we can trade some stock. So, Oppenheimer's, sending them nothing until 10 o'clock in the morning East Coast time, or 10:30. Because it's 7:30 in the morning out there, and they want to have their meetings with their physicists and so forth. So they were just trying to trade stocks with it. Exactly. All right, now, let's see. Let's slide over to, where do we go from here? Let's take a look at the euro on J4X. Right there. So you can see the weakness the last couple of days. See the green line trying to pierce down. And then what we do is, we compare the action in the J4X model, these three tools, with our work right here. There's about a 2-hour lag of accuracy, and most of the time, like 70% of the time. And then we're our work is 2 hours ahead, so we automatically just show both. So in other words, if you don't have Doc's work, at least you could have the J4X, which is a very, compared to watching moving averages and MACDs and parabolics and all the other stuff that's out there, they're kind of lagging to, when you combine the things together, they're definitely a much better leading indicator on where things are going in the marketplace. And so that's why we put ours work side by side, because we don't want to show you anything but the best. I mean, why would I want to show you junk? It wouldn't make any sense. This is recorded. This is put into posterity, I guess you could say, in a sense. In other words, you can go back and look at our webinars for the last X amount of years and see how accurate our work has been. How you doing, Robin? How was the weekend? Oh, I saw something showed up this morning. I noticed that. Thank you very much. Let's see. So from the euro, we go over to the British pound. Europe is really active at the moment in the general, philosophically, politically. France is asking England to do something, and Lagarde is dealing with the European Union, and there's a lot of action going on. There's a lot of action going on all over the place. So, it's a busy world, that they had the earthquakes. We've been getting hit by all kinds of stuff from the sun. In the sky, that bright thing that's shining on us all the time. And as our Earth turns away from it at times, like every 12 hours, it becomes dark and then it becomes sunny again. But the sun has been really pushing a lot of solar winds at us. Our magnetic field is dropping dramatically, and the sun creates earthquakes on Earth. So, it's been really noisy of late, and then now it hit an area with population, northern Syria and Turkey and all like that. So, that type of action's been going on. All right. What else can we say? And that's why the dollar is probably strong. The dollar gets strong on events like that. When there's a chaos in the world, they seem to run towards the dollar. Even if the chaos is here in the United States, they still run towards the dollar. Just for liquidity and so forth. It's just a place to run to, I guess. Now, we go over to the British pound. Let's see what the British pound's doing this morning. That's been in the sell for a bunch of days. Yeah, see, it's been selling down for a while now. It's been in the sell since right here on our daily. The weekly is flirting. It just missed it on Friday, I guess. Right there. Let's see what the number came out to be. Friday, no, it did. It made it into the sell on Friday. So we've gone back into a weekly sell again, but it doesn't seem like it's I don't know. We'll see. See how it acts. It is what it is. It's gone into a weekly sell. So the pressure on the product has been on. Oh, I don't want that. Not like that. There we go. Let's fix that. We always put these little lines in just to remind people. But what you really want to do is you just watch the zero line. If it's above the zero line, we're bullish. Like we went into the buy. We put them in at the end of the week, but we really went into the buy right there. Once the green line pierces the manifold here, these mirror imaged manifolds, they're a one standard deviation of our mathematics. So, and at times when people go, oh, that's like Bollinger Bands, we put the Bollinger Bands up and show you how behind the Bollinger Band is compared to our work. Our work is more accurate and ahead of schedule. Let's see, where am I doing here? Going solid line right there. There we go. And again, this webcast is recorded and put up on YouTube, and it's there, and we've been doing it for years. And so, in other words, if I was inaccurate, you'd be able to easily say, geez, Doc, how come I just watched one of your webcasts and you were saying totally the opposite? So we can't get away with just saying something without it being factual. We could be wrong. We don't have any problem with being wrong. We're accurate 8.5 out of 10 times. So accuracy is what we live for. All right, now let's put cable up on J4X. Oh, let me lower this volume too. There we go. Oh, there goes the controller. Now let's put British pound in there. There it is. You can see this. It's been in the daily sell for a bunch of days now, just like Chicago Quant is right from there. Just doing that slide down. And then there's our weekly underneath. And let's see. I bet it's red on the weekly here too. Maybe by 2 weeks, not one. Let's see. Right there. Yep, 2, yeah. So it's reflecting the weakness of last week, just like ours is right there. And it's reflecting weakness right now. And so there's the cable. And again, traders, believe me, we don't have any complaint about the idea of shifting and looking at any other product that you would like to see. You know, we really don't. We like it. We like to see new ideas. And if no one says anything, then I got to be saying something. So we have a rhythm that we go through. We go to the British pound, and then from here we're going to go on to the Swiss franc against the dollar, and then from there we're going to go over to the Turkish lira against the euro, and then I'm sorry, we're going to go to the yen against the dollar. Then we go to the Turkish lira, and then from there we go to the Canadian and so forth. So there's a rhythm to our madness here. All right, let's go to the Swissaroo. Good old Swissaroo. There it is right there. And this is, you can see this is the weekly right here, and we'll see it fill in. And then let's put it up on our screen over here. Right there. And you can see we went into a buy on Friday. Let's widen that a little bit out so it makes more sense to you, like so. There we are. Let's put our little green line in there, like so. So. There we are. And you can see it's not going up. Well, it was higher at one point this morning, but it's off a little bit, which means there's strength against the dollar right now. That's what that means. Now, what's interesting is it closed in a weekly buy. You can see that right there. So let's put our little line in there. And that's been in a weekly sell now since like the topping out of the Credit Suisse problem, the private bank. And then from there, see right there. There it is. Now and then what we do, because it's now below the zero line, we put this little circle in until, actually, it's already breaking the manifold, which is fascinating. It's really saying it's going to stick around. If it survives that for the next couple of days, chances are it will. Usually Tuesday on, if it's below the manifold, normally it'll stay there. What happened there? Let's try this again. There we are. Ooh, that's too whitish. That's a little bit better. There we go. So yeah, that's the manifold there. Oh, I see what happened. I took my pink out. There we go. So there it is. You can see there. There we are. So you can see there, it's breaking the zero line. And then we go like that and put a line on the zero line like so. There we are. And then when we tighten this up, you can see that it's been in the weekly sell. Whoa! Let's fix that. So it's been in the weekly sell since, let's go like that. There we are. Now why is that green? What in blazes happened there? All right, let's go pink again there. And then, yeah, we can basically put that line in. Let's do that too. There we are. I'm not sure why it's doing all these cute little things, but end result, as you can see right there, we went into the weekly sell, and the product was trading in the 100s, and it fell all the way down to the 90s. Now we are, we've jumped into the buy. We'll see if this goes on for a couple of weeks. Some type of bigger move than usual. Let's put it that way. And then let's put and you can see there, it's the same way on the weekly on J4X. It's starting to join in this week now. It's saying to be long. It's starting it off. And then let's go to the daily. And there is the daily. And you can see the Swiss has been moving up for the last couple of days, just like ours. The last 2 days. And if we widen that out again, if we can get our mouse, happy mouse. There we are. So there we go. Where do we go from here? We go over to the yen. It's interesting. The yen and the Swiss franc have been trading in unison. In other words, they've been trading a lot alike. As they both go up against the dollar, they both go down against the dollar. And I can see that because both are very conservative financial nations in their own way. And there's the yen. And you can see it jumped into the buy. Let's see. Let's grab one of these. I don't feel like creating one. There is none to be stolen. I will steal this red one and just turn it that way, like that. There we are. So we went into the buy on Friday there. And you can see we just missed getting into the weekly buy, which is curious. Right there. See where it says plot 1. And it says, let's see. Plot 1 is... Oh, wait a minute. Maybe it did get into a buy. It did. So it did. It also climbed into a weekly buy last week also. Now you can see it's piercing down, which is kind of interesting. But that did make it into the buy. You'll see plot 1 and plot 4 in that big long box. Plot 4 is 0.17 and plot 1 is 0.08. And so you can see the pressure has been on. And then this little green, this little blue dash line is a fast-moving 3. We like to look at both of them and see what the action is. So, and we can go like that. Change that color to that. And then go like that. And go like that. And there you are. So the yen also is showing the same stuff. But notice this, whereas, it's still high. The Swiss had, let's go back to the Swiss real quick. The Swiss started off a little bit higher. Right there, you can see that. It was higher than the close of Friday, but it's moving down a little bit. Maybe a little profit taking. And then maybe by the end of the day, we'll see that strength pick up again. It'll start to head up on the north side of it again, gaining in value. So, all right. Now we go to the magical laboratory. It's like watching an experiment. And that is, what can you do to destroy your currency? And obviously, for like the last 7 years or so, in Turkey, they've been doing a great job at trying to destroy their currency. And there it is right there. Last Thursday was all-time highs. The product has gone under the political leadership from 1. Let's put it up on J4X. J4X can be really, really clear on things like that. So you can, when we go over and look at the euro against the Turkish lira, and we always like to say it's like real estate. Location, location, location. So the product was trading. There is, let's make it the whole page too so you can see this. It's amazing. It was trading there back in 2019. That's only 4 years ago now. It was trading at 6 and change. Now on Thursday it was at all-time highs at almost 21. I don't mean to laugh. It's a sad thing to laugh at. And then let's put the weekly in there. You're going to see that under this leadership of Prime Minister, now President, they've taken the product and they've really devalued it, from 1 to 20 or 21, something like that. Look at that. So back in 2010, I think Prime Minister Erdogan took over right around in here in 2012 or 13, something like that, 11. And the currency was trading under 1 or at 1. And under their leadership, their policies have taken the currency all the way up to 20 and change. So now, when you want to buy a dollar, you need 20 lira. Back when they first started this economic policy, when you wanted to buy a dollar, you took 1 Turkish lira, handed it to the bank, and the bank would give you $1. Now, when you want to buy a dollar, you have to give them 20 Turkish liras to buy a dollar. So that's been very painful to the population there, and so it just is what it is. It's just whatever economic policy they have going on, it's been working. They've taken it all the way up to 21. Maybe I don't know why they want to devalue their currency, but maybe they're hoping to get people coming to Turkey to buy things. Maybe that's what the whole objective is. A lot of times, countries devalue their currency to try to get investors to come in. So, if done right, it usually works out on some level. And when done wrong, it doesn't. And that's just the way it goes. And it's just the facts of life. So, that's where we are. And it's been fascinating. Our math is, we've had years where we've been in weekly buys. Literally years. In other words, you can see some currencies go into a weekly buy, another week goes back into sell, and goes back into a buy again. It might stay in a buy for 5 or 6 weeks. We've had the Turkish lira, one time it went 54 or 55 weeks in a buy, Another time it went 52 weeks in a buy, a whole full year. Another time it was like 27 weeks in a buy, and then it went into a sell for 1 week and right back into a buy again. So I call it the laboratory. It's like an experiment, you know. Whatever policies they're doing, it's working. You know, it's going. They've been able to take their currency from 1 to 21. I mean, obviously that's their policy because it's been doing it for so long now. How else can you look at it as not their economic policy? All right. I mean, if it wasn't the policy they wanted, then they would have changed it. It would stop. It would have stopped going way up. You know, just simple concepts like that. That's the way I am. That was another nice cup of tea. All right. From there we go over to two currencies that, for a long, long, long while, you know, for many, many years, followed a good rhythm. Canadian followed the oil market, and the South African rand followed the gold market very well. So let's do that. Let's go like that. And there is the Canadian right there. You can see that it's been on this downwardly slope. So obviously oil has been rising. Now let's go show you what oil has been doing over here on J4X. Right there. And where's Mr. and Mrs. Oil? Right. It's around here somewhere. There it is, light sweet crude. And let's put the daily up there because that's the weekly. You can see the trend has been, down overall for, since the second quarter. We're taking oil out of our reserve and selling it to everybody on the planet. Even the Chinese, we sell it to them. And let's go on a daily basis because it's always much more interesting to watch it on a daily basis. And you can see here, oil has been falling now for like 7 days. And at the same time, we've been seeing the Canadian actually falling, which is very rare. Normally, it would be something like this right now. You would have a lot of green going on. But it's not doing that. It's been kind of interesting. So in other words, it made sense. What's the date on that? That is the 23rd? That's the 23rd of January, yeah. So there's like it topped out around the 27th, okay? It was making highs in here and bouncing in and out of action. And so when you go over here and look at the 27th, right there, you can see where oil was rising, the Canadian was rising, and the 27th is right there. I think that's the 27th. Yeah, that's the 27th. So you can see this. It was doing its thing relatively well. It started to rise and got all the way up to there, and then it topped out, and let's see. So oil was rising, so the Canadian should be dropping. So you can see here, Canadian started to drop around the 20th, and there's the 27th, and then goes up and down, but then all of a sudden oil started to drop, and the Canadian didn't stop dropping, which was pretty cool. That's more positive for the Canadian. Of course, it's gaining against the dollar, but then now you're starting to get that bounce because of this falling price. It's starting to reflect now. You saw a little spike here, and you're seeing it's just the last few days it's been trying to perk in that direction on the upside. You can see we went into a daily buy on Friday, and you can see the weekly is getting very, very close of climbing over the zero line right there. And a lot of times it's been about 70-75% accurate. It's been very fascinating to watch the Canadian. Of late, it's kind of gotten a little wishy-washy. You can see here, this thing's been going down. You would assume oil, we'll put it up over here. And we had some good pops in oil. Put oil up on the screen here, right there. Oil has been climbing up until about 7 days ago, right? 1, 2, 3, 4, 5, 6, 7. So it was climbing, and it made sense. And the Canadian was doing the right thing, and now oil is dropping. And then finally, oil, the last 3 days, especially from here, the Canadian has started to turn up. So a little confusion in this area here. I think that's got something to do with the government pushing oil into the market. It's not supposed to do that. Matter of fact, the new Congress is trying to pass a law now so that the politicians don't use the oil for political reasons. It's supposed to be there for disasters like what happened in Turkey and what do you call it, Syria last night. Earthquakes, flooding, hurricanes, that type of thing, war, that type of thing. All right, now, excuse me for sipping my tea. Now let's go over to the South African Rand. We're going to throw gold up on J4X. There it is. You see the last 2 days it's been really harsh. It's climbing, 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 climbing. Now, we have the same problem. For years, it's been way more accurate than the Canadian and oil. The South African Rand measuring against gold has been really hot. I mean, been very successful. It tips you off when I can't tell you how many webinars we've done here and gone, okay, look at that. South African Rand is selling off hard and gold is flat. Watch the afternoon, they'll sell the gold off. And sure enough, they did. They did it many a time. But we had a problem. And we're going to show you the problem. Right there. What happened was it was doing perfectly well all the way up until the beginning of December. And we have a little green dotted box we put in there. And we drew lines on it. We were watching it. What happened was they found over $500,000 in cash in the president's office, and everybody thought he was going to resign. Obviously, he doesn't have that money. I mean, in other words, he's just supposedly an average person, and he doesn't have like $500,000 here and $500,000 there in cash on things. They found $520,000 underneath a cushion on his sofa in his office, and so. In the beginning, the first couple of days, everybody thought, okay, well, they're going to remove the president, that type of thing. But they didn't. And so ever since then, the currency has been trapped in some type of confusion. And now, we thought that, normally where gold went, where gold had gone. Let's put gold on this. Where gold had gone, where's it at? Right there. It was a pretty impressive... gold up until 3 days ago was at like 6-month highs, 7-month highs. It was trading up in the 1970s area. The back months are even crazier. I mean, they're trading $100 higher in April of 2024, and they're trading almost $200 higher, almost at all-time highs in April of 25. And that's that delivery problem that we see in gold all the time. So in other words, they won't trade this because at that high a price because no one will deliver it. So they can do the back months because no one's going to can forcibly exercise gold. It's not like an option. So, it makes it tough. And even if you exercise the option, you get the futures contract. You don't get the gold. So that's what's so great about that type of option where you can exercise it. And put it into that position. So, what else we can say about that? I guess the best way else to describe that is that the things have turned upside down in South Africa. Also, that's what it really comes down to in the end. So you can see here, we went into a daily sell here a day after the 6-month high. And now you can see today, well, actually it's stopped now. You can see it over here on the right side. You can see it says, where is it at? Right there. You can see it's a plus again. It was through the zero line when we first sent the charts out this morning, a couple hours ago. Now we can remove that little line, and if it pops in there again, we'll put it in there again, that type of thing, and keep an eye on it. So this is gold. All right, from there we slide over to the last currency that we follow. And believe me, traders, if you'd like to see another currency, just say it and we'll show it to you. Right. Oh, cancel. Okay. Okay. There we are. And then we go, where do we go from there? We go to, let's see, Mexican peso right there. And the peso has been bouncing off of like 4-year lows, which is pretty interesting. It seems to read politics pretty well in the United States, so it's slid into the buy there on Friday. And you can see that the weekly is still pressing down for the last bunch of weeks, from up in here in the 19.5 area. And it traded all the way down to like 1840, 1815 was the low. So it moved a full handle down. All right, that's it. That is it. What else can we say about any of this at this point? I guess that's done for currency. So now let's slide over to, we'll go back to the metals complex and look at silver and copper and so forth and see what's going on. So let's close this. And we will open this. And there is the gold. You can see that there in gold. And you can see it there on J4X right there. Let's take a look at silver. Put silver up on J4X. You know what, let's see the weekly. I want to see what gold's doing weekly-wise on J4X. Okay, so like last week, it showed that same weakness, and it actually pushed it into the sell. See, the green line is below the dashed line, or the golden dashed line there. We got a red hinky. You can see it's breaking down there, and we got that same thing going on. And you can see on the daily situation, doing the same thing. Last excuse me, last couple days, last 2 days now, it's in the sell. 1 day, 2 days. It's very close. See how the green line is trying to pierce through. So here we have our work that we went into the sell there on Thursday of last week. All right. From there we go and take a look at the other precious metal, and that is silver. Right there. And it's been in the sell for 2 days there. You can see that, and the green line was much more accentuated. And let's put it up over on Chicago. Right there. You see it's been in a weekly sell for a couple of weeks now. This is going on, starting the 3rd week in a weekly sell. And let's see, let's go like that. And then from there, where are we at? Let's do this. Let's put the that's the weekly. Let's see what the daily looks like there. Right there. And you can see there that's doing it for the 3rd week also. And the line broke. It was at the high end of the range. All the good things that we look for, to understand all this stuff. Alrighty, from, see, what else can we say about any of that? Oh, I guess we should put the daily back up there again, too. There we are. So, it's been trying to track us fairly well. I can't complain. We've been in a daily sell throughout this whole thing here. And then it finally capitulated, and when it capitulated, it did it here, too, at the same time. All right, from there we go over to copper. See what the other important metal, that's like the gold of China. Copper's, always seems to be is always being influenced by the Chinese market. You can see here it's been in a daily sell for a bunch of days. And let's put it up over here. Right there. And see it did slide into a buy. It went into a sell up in here and then stayed in there because this is a green and a red, so it has to be red or blank like that. And for the long side, obviously, red and green doesn't change it. It stays in that trend until it's green or blank. Is there any blanks here? I don't see any blanks there. There's a blank right there. And so you can see we were in a sell for a bunch of days and then went into a buy there and went right back into the sell after they sold it down again. And Copper is trying to get into the weekly sell. It's still, you can see the fast-moving stochastic has broken the zero line last week, and but the slow-moving one, the the green, is not, and it's also the histogram, the white histogram, and that together. And you can see the pressure has been on the downside when it comes to the daily action. This was, this was where they declared that they were opening their economy up. And boy, did everybody get excited. But people are starting to try to figure out, does it really mean anything? I always say here that when looking at China and the United States relationship, China is like a colony of the United States. They don't like us, of course. We plow in $200 to $300 billion a year. Can you imagine? There's no other country in the world that gets that type of money from us. And they manufacture all kinds of, plastic, the spatulas and so forth. They sell us all kinds of ingredients for almost like zero. So, it's because they have slave labor over there and so forth, and and it's communist, so they control what you have and when you have it. So it's an odd situation. So the metal over there, the copper, is because they're growing, is very important. For plumbing and so forth, construction, electrical wiring, all kinds of things like that. So it definitely pushes the price up. So when China looked like it was going to open up, and that's what this was all about right there, everybody got excited, and I thought, oh my goodness, it's going to open up and the world is going to be happy again. But they don't really create anything particular more than just a lot of frustration, as you can see with that crazy tech balloon that they sent over the United States. But you can see this here, the bottoming at $3.40 way over here, was when the Communist Congress, the CCP, the Chinese Communist Party Congress had ended. And once it ended, they get together every 5 years and push policies, they discuss and debate and whatever they do. They run the country, the 5,000 communists. And then so once that ended, it seemed to give it a big punch on the upside, which was kind of neat. We went into a weekly buy, as you can see here, and the product went from 340 to, in 2.5 weeks, it went to 393. So it was a pretty good move. And then things chilled out a little bit, and then it got the what was the last thing or something? Oh, they dropped the COVID. That's what it was. So they dropped the COVID restrictions around here, and said they were going to open up their economy, and then the product went from 370 something to, in the same time period as the last one. It was about 2.5 weeks. It ran to 434. Again, another 65-70 cents. So copper, is swayed by the policies of China dramatically. All right. From there we go to, where do we go to from there? We go to, since it's Monday, we'll go take a look at platinum. And there is platinum. There's the April contract. And you can see we slid into a weekly sell last week. And obviously that's why we're seeing even more pressure on the metals complex. The platinum has a natural tendency to lead the metals market. Now what's interesting is that, silver's been in a sell for 3 full weeks. So, it's interesting to see that it's jumped ahead of the platinum as a leader. And now you see gold joining in. Where else? That's about it. That's the 4 currencies there. And we can go look at, we have a client that's looking at palladium. So let's just take a look at palladium since we have the chart on it. Right there, that's the March contract. You can see it's trading it down at its lows, third day of the sell. Like silver, it's on its 3rd week of a sell right there. So that's been the palladium market. Let's save that data while I'm there. since I'm here, I might as well save it. There we go. And same thing with Mr. and Mrs. Copper. Well, since we're here, we'll save it. There we are. This way it's easier to refresh. It looks accurate. And then we can refresh it in another hour and send it out to our client. Let's see, where's Copper at? Right there. Alrighty. So now we go over to the energy sector. So there is, we showed you March oil, which is trying to perk its little head up this morning, which is nice. And you see the little curve there on the weekly. And the daily is still in that sell from a bunch of days now since the mid-80s. And it fell all the way down to the, what did it go down to, 71? What is that? 73.10 is the low. So it dropped almost $9 over a 7-day period. All right, and then we look at the back month, and there is the May. Same situation. It's trading at 74.84, as you can see right there, live. And you can see here the March contract is trading at 74.23. So it's 61 cents difference. The back months are, the contango to them have become more expensive. So it's a delivery thing going on here again. All right, and then from there we go over to, which is fascinating, the natural gas right there. You can see natural gas here in the States is trading at $2.44 a cubic foot. And in Europe it's trading at like $25, $26 a cubic foot. You know, because they got that energy thing going on, you know, where they think they're saving the solar system or something like that. You know, the whole solar system's in turmoil right now from fossil fuels on Earth, they say. And so, you know, I mean, we got 2 ice ages going on 2 planets. We've got, I think that's Neptune and Uranus. Pluto's lost a third of its atmosphere. We've got earthquakes on Mars, which NASA said would never happen ever in the last 9 months. And now we're losing equipment up there from radiation from the sun. Or no, I guess it's the green people tell us it's the SUVs here on Earth affecting the whole solar system. So, and then you got Jupiter and Saturn having its problems. Winds have reversed in direction where we followed for hundreds of years. You know, things have gone in an opposite way. So it's definitely, there's a lot of turmoil going on the solar system, and you can see it here in natural gas. In America, we don't care. Look at it. It's down to $2.45. And in Europe, it's trading at $25, the same amount in the increment, you know, cubic foot. So Europeans are really hooked on the idea that we're destroying the solar system. And obviously, in the United States, not so much. I mean, we talk it, but we don't put our, as they would say, we don't put our money where our mouth is. All right. And then from there, we go over to J4X and take a look at the same thing. We'll look at the natural gas right there. You can see that $2.43, 80 now, with an offer of $2.44 and a half, or 46 now, 46.7. Come on, we're watching you live. Go to 50. Give us a buck, $2.50. I want to see $2.50. All right, yeah, move up those 5 cents. So from there, there's only one other way we can watch the oil market in Europe. We watch it through. Oh, there's 240. There it is. Thank you. There's $2.50. How nice of you. Thank you very much. And then there's for 250. What? And so $2.50. Yeah. You know, it's like a classic 1950s thing. I'll take some gasoline for 17 cents a gallon. Yeah. Let's go over to. From there, we look at the energy company in Spain. And that energy company in Spain, Llanos there, the analyst for Dicoscopy, says that I must be their biggest promoter. And there it is right there. It's trading at $25.90. You know, it matches up to the European cost of natural gas. And that's the only way we can see it at the moment. Llanos has been pushing on the company to put out an index, but they're having a delivery problem. And that's the big problem with all this stuff, is that if you can't deliver it, you know, in an execution style, you know, a financially executionable style. In other words, you sell it, then you can exercise the contract. then it's really hard to have. That's why China's having so much problems financially. Their stock market's off like 60% from all-time highs for years. And even Tokyo has finally gotten almost to all-time highs again. And we've seen some of the European markets, towards all-time highs. But China is basically has a fixed currency, and they don't really grow very well if Americans are not buying things from them. So that's why it's always an odd thing. Why do they try to bite the hand that feeds them? I don't know, but that's the way they are. But anyhow, that's where we stand when it comes to the energy sector. And so you can see here, 25.90. So more than likely, the cost of natural natural gas by cubic foot. That's how they sell it, by cubic foot, because it's a gas. They measure a quantity like that, like everybody else measures a quantity, if it's a gallon, an ounce, or liter, or whatever. And so that's where we are. All right, from there we go over to, what else do we do? That's it. That's the energies. We're done the energies unless you want to see them. And then we'll go find whatever energy you want to see. From there we slide over to the stock indices. Take a look at the S&P 500, what I like to call the global index. Since 50.2% or 50.1% or 50.3%, something like that, are American companies in the S&P 500, and 49.6 or 7 are foreign incorporated. So when you look at it that way, you can basically say, wow, the S&P 500 is really a global index. And there it is right there. You can see it's down today. Feeling the pressure. You can see what is that? That's the daily. We're seeing that weakness there. Let's put it up over here on Chicano. Chicago Quant Technologies. That's who we are. And let's put that up, if I can find it, right there. So you see there, we're got a little red line in there. It's pressing down. You can see that right there, it's broken the zero line right there. You can see we're still in that weekly buy, but it's starting to curve. Let's see what it looks like on J4X. Right there. And you see it's still in its green, but it's just like ours is over here on its green. You see it's got that green thing going on. So in other words, it's and like I said, there could be some profit taking. I do expect to see some weakness going into February. We'll see. We start to, and we've had some really wild things kick out on our weekly chart. And so, it does not surprise me that something is starting to brew. I'll show you in a second. There it is right there. Let me show you why I say Chicano and so forth. There it is, like there. That's our website out in Chicago. And so, that's why I'm always mumbling about it. That's the chart you're seeing, all the time here. When we have J4X right here, there's ours right there, and that's what I'm mumbling about. Because I a lot of times, rarely do I show you what I'm mumbling about, but I thought, let's just, because I'm so vocal about it this morning, and it's Monday, and I'm everybody's kind of tired from the weekend type of thing. So anyway, there is the S&P 500, and you can see that pressure that's on it at the moment. I'm not too bearish. It has taken out all the highs. It got up to 42. Not bad, It's been a wonderful run. We've had a pop from the 38s. We went into our weekly buy there, and it went up to 42. So it's been a nice little pop. One of the things I was mumbling about, let me just show you. I think I'm going to put this up on LinkedIn too. I usually put it up on our LinkedIn situation. Let me go to it. Open workspace right there. And I'm going to show you what I'm talking about here. We follow inside and outside days, technically. I developed this concept back about 45 years ago. And that's what these little green lines are here. And like this is just your classic bar chart, right? You see that right there? And then I put these green lines in when there's a higher high and a higher high or lower low combination, or vice versa. You can see here, this was a lower high from the previous day and a higher low. So it's an inside day. This is referred to as an outside day because the high is higher than the day before and the low is lower than the day before. And now it's they're kind of, I want to say here it doesn't look like they're rare, but they're very rare. When this occurs, we got it down here at the bottom of the Dow Jones Industrial Average, which was trading in the 29,000 area. And from it, I put out a thing to the old traders, and even Janos gets it, and some young traders get it. I send it out for free. So anybody who wants to see it, you just ask for it, and we'll send it over. Just tell us give us your email address or contact Robin in Chicago, and we'll give him your email address, and we'll make sure you get it. And it shows like a spreadsheet of all. It follows the accuracy of our mathematics all the time and things like that. We followed for decades. And so you can look back at the history, from 2 weeks ago or 2 years ago or 20 years ago. And at the same time, you can see here, we've had that again. You notice it wasn't too much activity here. And then we had the box. So we threw the box in. But this last week, we had 4 in a row again. And we're having it up here. There's a lot of choking. At first, I thought it was going to be a breakout on the upside. And it doesn't seem to be happening, and we're getting a little correction in here. So if we get into a weekly sell, they may start to correct this product. And like I said, I started, I've been saying I'm looking for a strong January and a weak February or mid-February weakness. So we'll see. Maybe it'll take it out, do another high, and then take it out. It's hard to say. The interest rate thing is kind of, the quantitative QT, they call it, quantitative tightening, is having effects, So. All right, traders, I guess we've had enough fun. I don't see any questions out there. So, happy trails to you until we meet again. That'll be tomorrow, Tuesday. Happy trails to you, to all our trading friends. Later, traders.